Hello, everyone. This is Socrates with a Hyperwave YouTube channel and Lucid Investment Strategies. Coming to you today with Tyler Jenks to look at the weekly close in the S&P 500, as well as the weekly close in gold and the recent price action in Bitcoin, which didn't take a day off yesterday while we did. So I hope that everybody had a fantastic holiday. I certainly did. Have recently decided that July 4th is my absolute favorite holiday. It's always falls right in the middle of summer when weather is nice and everybody usually just gets out of town and goes camping, at least around here. And that's one of my favorite activities. So I had the RV loaded up and went out to a nice lake with a bunch of friends. We did some paddle boarding, grilled out, got in the lake, and eventually brought the chessboard out and had a great time. So that was where I was at yesterday. What were you doing, Tyler?
Just about the same thing. It was beautiful here in the 90s. My family came over. We grilled out. Had a great time. So I agree with you. It's been my most favorite holiday forever. Back in the little town I grew up in, they had all kinds of festivities, very middle America sort of stuff. And I used to love it. Ever since then, I always try to go to see fireworks, and it never works for like the last 35 years. We one of the best fireworks displays is off the East River in New York, and I took the family when the kids were young. We drove all the way in 2 hours, went up to the 50th floor of the General Motors building because we can see everything from there. And the kids were all excited. We were all sitting by the windows at 9 o'clock when it was supposed to start. And then we realized it was all behind a big, huge building. There's like 80 some odd stories between where we were sitting and there. And couldn't see a thing except it looked like lightning every once in a while. And ever since then, year after year after year after year, I miss it. For one reason or another, I missed it again last night because they had done it the night before, which I didn't know about. So anyway, a lot of stuff is happening right now. Normally it's with Bitcoin, but Bitcoin kind of fell asleep for the last 2 or 3 days, stuck in this range between 11,000 on the bottom and 12,000 on the top, and was getting up there to 12,000. Then it worked its way back lower and then back and forth and back and forth. So we'll take a look at that. But first we want to look at gold, and we want to look at the stock market. We had pretty good employment numbers come out today, and in fact way above expectations, but it caused the dollar to soar, gold to drop sharply, and the euro to drop sharply, bond yields to pop back up, and so bond prices were strong. So it was a very strange day, but by the end of the day, the stock market, which had been down 200 points, closed just down a handful, and the Russell 2000 was down big, turned around and came back and closed positive for the day the last I looked. But we'll take a look at those things because in the context of everything Socrates and I have been talking about, we've got these huge moves going on. Breakout in gold, and now it's pulled back below 1,300. Breakout in the stock market, and it looked like it was going to pull back today, and luckily it hung on pretty well. A breakout in Bitcoin, but then stalled out at 14,000, dropped all the way back down below 10,000, and now is trapped between two numbers that I think are very important: 10,100 on the bottom and 11,100 on the top. So with all that, I'm going to turn it over to Socrates to pull up his gold charts, and we'll see if I can jump on those. Otherwise, I'll pull up my own. Then we'll move on to stocks, and then we'll conclude with Bitcoin. And since it's a Friday on a holiday weekend, we'll try very hard to close up around 5 o'clock. which is in about 50 minutes.
All right, I will throw it on screen share right now. And I have heard in a lot of comments that the resolution when I screen share isn't the best quality. So I have tried to increase the size of the y-axis here to make it a little easier to view the numbers, and then also trying a new streaming option today, which is supposed to be best for resolution when sharing screen. So hopefully this is a little bit better. If not, I'll continue trying my best to figure that out. So taking a look at gold, and that is going to be closing here soon in the next hour or two, depending on the exchange. And first thing that jumps out at me is the bearish sort of doji that we're seeing here. And this is delayed, so I'm going to go ahead and pull up a live chart, hopefully. All right. So we notice that it is testing 1400 and falling back below, and doing so in the formation of what I would consider a bearish spinning top that is going to have long dojis on both sides of the candle, and the body being basically in the middle with the open above the current price, giving us the red candle. So that is a bearish spinning top that is following a shooting star. On the weekly chart, candlesticks are very important to me, and this is painting a very interesting picture. We got a shooting star, and then this candle failed to break above the peak, keeping the shooting star intact, but just barely. We see that the high of this candle is 1437, and the high of the candle before is 1439. If you do take out the high of the shooting star, then it is invalidated. That didn't happen here. And furthermore, we confirmed the shooting star by breaking below the bottom of it. In this case, the open, which occurred at 1398.80. So we kept this shooting star intact. We confirmed the shooting star with a break below. I don't need it to close below to be confirmed. Just as soon as that breaks below, that is confirmed. And it is also doing so by forming another bearish candle. So that would be the low of this candle would be something to keep an eye on. And when just trading candlesticks, basically, if I was just trading candlesticks, the entry on this would be a break below. Short entry or a sell or a take profit would be entered as soon as we broke below 1398, and the stop loss would be placed above the top of this wick at 1439.14. So just based on candles, I would want to be short or have taken profit right at the 1398 area. And candles are extremely important to me, but they're not the only thing that I'm going to be looking at when trading. So let's go ahead and zoom in a little bit, take a look at the 3-day. This is a time frame that I really like, that we do not check maybe as often as we should, because this is definitely one that can be quite powerful. So taking a look at a couple trend lines as well as a TD sequential on the 3-day. Notice we got 3 nines in a row on this down move back in the summer of 2018. That's something that's very important to me. 3 of those in a row screams that the trend is exhausted. That was confirmed with a combo 13, aggressive 13, and sequential 13. So big buy signals from the 3-day TD right down here at the exact bottom. Also got this hammer candle, which is a very nice reversal candle. So now we're getting a 9 up here, and we are testing this trend line. These aren't really hyperwave lines necessarily. Reason being is there's no phase 1. And they look best on a shorter time frame than the weekly, but they are accelerating trend lines, which is very important to me and something that I want to pay attention to. So we get the first trend line off of the August 15 low in 2018, and then in May, the end of May 2019, we start to accelerate off of that. That's when we confirmed this, what I was labeling a bull flag and a cup and handle. So when we confirmed that, we started to accelerate, and that has given us a potential new trend line that we looked at last time we had a show a couple days ago, that this would be, that was right where we got this big green candle. And if that could hold, then I was thinking that we should be in for another big move to the upside. But I specifically said that I didn't think it was going to hold, and there were a number of reasons why. And we can revisit those. Right now, it looks like it is getting very close to breaking down on the daily chart. So the average directional index on the daily was the main thing telling me to watch out and potentially prepare for a throwback to the 1350 to 1375 area. We're getting the ADX rolling over, and it's above 50. Big sell signal to me. This is much more important to me than the TD sequential, because it is more of a there's the TD sequential has, when you hit a 9, there can be a 1 to 4 candle correction. There can be a 9 count in the other direction, or you can just go ahead and start a brand new count in the same direction. Those 3 things can happen. Whereas when the ADX is rolling over at resistance, it is much more it much more strongly indicates that the trend is exhausted and that we should at least get a sideways consolidation or potentially like a full-on 9 count in the other direction. So this is something that is very important to me, and I also want to see it kind of in confluence with the TD. That's can be a very powerful these can be very powerful ways to complement each other, in the sense that when this is rolling over and you have a green 9, now I'm expecting much more than just a 1 to 4 candle correction. And I'm not at all expecting us to just blow that 9 out and start a brand new count. Of course, anything can happen, but this makes me very confident that prolonged consolidation is going to happen. And that gives me 2 options instead of the 3, in the sense that we could have prolonged sideways consolidation where the price goes nowhere, or we could have a full-on kind of 9 count counter trend move throwback. So that is very important to me, seeing this roll over, and is why I did not think that this trend line should hold. This green 9 said, watch this 1 to 4 candle correction, and the trend line could very well be where it takes off. ADX says not so fast. This thing should correct more. Anything can happen, but I am expecting this trend line to break down in a throwback to about 1340 to 1350. And just looking at the TD sequential, we've got the perfected 9 with a reversal candle on the daily. That's a shooting star with a perfect green 9. That right there, the ADX hadn't quite started rolling over yet. So now is even much more of a sell signal to me than this perfect 9 that is a shooting star that was closer to the top. seeing that, I'm waiting for a rollover of the ADX and a breakdown of this trend line before thinking that this is actually exhausted. So on multiple time frames, we got the 9 on the TD, the daily hit a little while ago, and the 3-day is just happening right now. And it looks like it is following a bit of a reversal candle. This isn't a bearish spinning top since it is a bullish candle, but you still get the long wicks after a big trend, which to me is definitely a reversal candle. The 3-day ADX still shows plenty of room to go, but this is an area of resistance. This is an area to watch out for a rollover, and the DIs have already started to converge. So this is a spot where I think it's a good time to be looking at buying the dip. This was a very significant breakthrough of the 1350 to 1375 area. And if we can maintain that over the next couple weeks, maybe month, then there is a lot more upside. If we're not going to maintain it, then it's going to retrace over the next couple weeks or so. The longer we stay above it, the less likely it is that we will retrace back below that area of prior resistance. So I am definitely expecting this thing to cool off for a little bit, but I'm fully expecting it to find support above 1350, and then it will be ready for another very big move to the upside. And that is what I'm expecting, and also how I am positioned with a very significant percentage of my portfolio in physical gold. So that is what I am looking at. What are you thinking, Tyler?
Yeah, let me just take a quick look at a couple of longer time periods. I agree with your overall conclusion that it looks a little funky right in here in terms of being able to ascertain what the near term looks like. It sure looks like it wants to go down. Let me just see.
And you are on screen share. We're looking at your BTC chart.
Okay, that's not really the one I wanted. So I need to bring up this one. And I'm going to stop screen sharing, and I need to bring that one up. We've been working on multiple monitors today, and it's not as easy as most people would think. Probably most of you it's easy, but I am not most people when it comes to technology. Okay, so we go boom, bada, boom, bada, boom, bada. Now we go over here. Now we go over here. Now we go over here. And finally, we find what we are looking for. Right there. Okay, there we go. So this is the 8-day, just because some people have been bugging Tone and Socrates about 8 days. Some of our followers really like it. On Bitcoin, it's doing some interesting things, but I want to go to the 1 week and just see if we look healthy. And this line that I've got at 1360, and you can drop it all the way down to the 1340 area, which is what Socrates was talking about this beautiful cup and handle. We broke through it. Now, the most I would expect is a pullback down to that area. And I'm not even sure it's going to do that. I think this breakout is very big and very important. So I'm not going to be taking any sort of profits here. On the weekly, we're only on a 6. We've got another 3 weeks to go to the upside according to this. Consensio is fully bullish on a weekly basis, short, intermediate, and long term. The stop and reverse is fully bullish all the way down to 1320. So as an investor, I don't want to be caught in cash. And my idea is to add to existing positions if we get a pullback. And if the pullback is really not much other than a news item, which is basically what happened today. We had the employment report come out today, and it caused the dollar to soar. It was a very strong report. The dollar soared and gold took a tumble. Stock market dropped because people started to think there's no way the Fed is going to cut interest rates with this kind of an employment number over 200,000, 220,000 new jobs, where everyone was expecting 175. And CNBC had on a bunch of economists that were looking for 100,000 or lower. And so the only one that got it right was Rich in the Chicago Board of Trade area, and he hit it right on the button at about 212,000 after you take out the last 2 months revisions. Anyway, that was basically a news item. So I think this wild action today and this week had a lot to do with just uncertainty on the economic front. But from a technical point of view, we've broken out of a 5-year top, and all the signs are up on longer time frames, weekly. And let's just take a quick look at the monthly. The monthly looks fabulous. We got a green 2 that is trying to get above a green 1, but it's stalled out along with the weekly here. But notice the moving averages, the long-term moving up, the intermediate term moving up, the short-term moving up. And we just closed out the last month. So this is, of course, this month's action. We closed out the last month up here. So we've started off a little sloppy, but weekly says everything's fine. Monthly says everything's fine. And based on that, I would not be interested in looking to raise cash, but to get cash ready from other investments, other asset classes, that if we got a chance to buy at another $40 lower than where it is, I would be adding to my positions. Now, as Socrates likes to say, anything can happen, and that's the important thing. I'm talking the bullish picture on the long-term basis. Socrates basically agrees with that long-term bullish picture because of all of the things he said and I'm looking at. But clearly on a short-term basis, there's room for concern. But just go into that area of concern knowing that even a pullback below, down to 1360, the intermediate term moving average on the weekly is coming up there very quickly. Every day that goes by, it will get harder and harder to break that intermediate term moving average. Therefore, that's probably your risk profile is at a maximum from current prices of $1,400 down approximately $40. And on the upside, my target is the 1,600 area off of this. So on a risk reward basis, I think you want to stick with this. Anything to say, Socrates?
Yeah, just
on
one
the
thing to
term?
add in that many people are afraid of this falling back below 1350 and saying that basically it would be all over if that happens. I would have one last thing to hold out hope for. And if you want to illustrate it for me, Tyler, give us a trend line, bull trend line starting with that low up. Yeah, back it up a little bit right before that. Yep, right there, that low.
Right.
Give us that and connect to the pullback that occurred into like 1280. There's a nice bull trend line that we can put right there.
Okay. You want me to do it from the body of the candles or the wicks?
The bottom of the wick of that 9, the absolute low.
There.
And then connect to the close, or yeah, maybe connect to the wicks. Yep, right in there.
Yeah, the
Perfect.
next low wick is right about there. We can move it up a smidge to cheat. Nobody will call us on it.
Yep.
And there you go.
So that is, I could definitely see a pullback to that area. It would make a lot of sense to me, and we could, for a month or even 2, pull all the way back to about 1320. That's going to trigger everybody's stop losses. Everybody's going to be putting their stop loss at 1340, 1350. And if we can go below that area, many stop losses would be triggered, and there would be a ton of support still waiting at 1320 area or so. It's going to be from that trend line and also from that long-term moving average, depending on what happens. Before we get there, that 30 MA is going to be tracking right along that trend line and would also be below 1340 if we get there in the next few weeks.
Right.
So I'm seeing a kind of a sneaky area of support there that could get a lot of people, and could also be a really, really good buying opportunity, because that would be such a well-defined area. If we do break down that bull trend line, then I would be very positive that it was just a trap and that it's time to basically get out. So that trend line is important to me, and I'll be definitely watching that closely. And that's something that I'll be kind of expecting if we do break down that accelerated trend line that I had drawn earlier.
That's great. Very good. And I completely agree with that. I'm going to get out of this for now. And why don't we take a look at the stock market?
All right, I can pull up a chart real quick. I feel like this will be brief. So let's see what we got. Okay. S&P 500. So I'm really liking what we saw out of today's action. It could be interpreted multiple different ways, but I'm really liking what we're seeing in the sense that we got a very strong close after having a pretty frightening open and next few hours. So yesterday or Wednesday, I was thrilled with this action, following my long right here on this close at about 29.72. We get a real nice follow through, which is exactly what I was wanting to see. And then today, after the holiday yesterday, we open right here at 29.8440 and quickly pull all the way back to 29.68. When that was happening, that's a big red candle that opened more than halfway below this extended range candle, which is just absolutely disgusting. But what it looks like all that happened is that it filled this gap here. We had a bit of a gap on the open from July 3rd, opened at 2978.2, and July 2nd closed at 2973. Today's candle came down to 2968, fully filling that gap. And then we respond with a very nice kind of, not only does the candle turned green, but we also get this nice wick here, which tells me that there is a lot of support from 29.68 to 29.85. The bears were unable to keep the price down below 29.85 for very long because there was a lot of demand, and therefore, to me, this is a bullish candle. Many might view this as a hanging man, which is essentially a long wick on bottom with a small body on top following an uptrend. And I am not viewing it that way. I'm viewing this as a bullish wick in the sense that it is below the candle and represents more demand than supply at these prices. And it's also following a breakout. Often when a pattern breaks out and we are in like a long-term consolidation period or a long-term pattern, and it is on the verge of breaking out or in the process of breaking out, we're going to get a lot of head fakes and stutter steps. It's going to be very, very common and very, very much should be expected. So right here, we tried the horizontal boundary was essentially at 29.54 is where the highest I would have drawn this horizontal boundary. And we break through it right here and close at 29.54.2. Daily close above this pattern was enough for me to think it was confirmed, yet I was still more interested in Bitcoin at this time. So this is just to illustrate kind of the head fakes and stutter steps that will happen around the major boundary, specifically if it's been stuck in this range or pattern for a very long time. So right here, this is a breakout. This confirms the pattern. Daily close above. For me, the pattern is confirmed right here. But what happens? We instantly retrace back from that 29.54 close all the way back to 29.14. So many people that were buying this breakout were probably setting their stop loss at the bottom of that breakout candle. That's a very common stop loss. And look how it reverses, takes that out, and quickly goes back up. And then we break through and get this sort of bearish spinning top and kind of stutter step right here where it just goes sideways. It doesn't necessarily come back. This is what I would call a head fake. This is kind of a stutter step. And that's what I see here, that this is a stutter step, that it looked like it was ready to take off. So everybody that kind of FOMO'd in bought at these highs. And when that happens, the price will often do a little stutter step to freak these buyers out and trigger their stop losses. Anybody that bought this top right here at 29.96, if it was me, I'd be either using 50% of this candle as a stop loss or the bottom of this candle. Both of those got taken out, and now we didn't really give up anything in price. A little bit, but we're still right here in kind of the same area. Very much a stutter step to me. So while this right here is, in my mind, something to be worried about in terms of this could be a hanging man while we're still very close to horizontal resistance after a big move up. I'd be much more inclined to label this a hanging man than this, because this is after a horizontal breakthrough and following a correction. This to me is more of just a stutter step. And I think that all in all, we need to go ahead and look at the weekly candle because that's what just closed. And this is a very bullish weekly candle to me. I'm loving everything about this in the sense that the wick pulled back to the prior week's open and the weeks before close. That's a big area of horizontal support for me. And seeing that the price pulled back there and wicked off of it shows that while the price was kind of doing a stutter step, the higher time frame was finding support right where it should be, and the close is very bullish. We're closing at new all-time highs following a breakout of a year and a half long consolidation period. We wicked down to retest the horizontal threshold and spiked right back up and closed near the top of the candle. So this is very bullish to me, and something that I think if you're wanting to be entering X into this chart, then now is about the time to make sure 100% of X is entered, as far as I'm concerned, if it wasn't already entered before. And the reason that I say that is I really don't like buying after these big extended range candles. But I do love buying these kind of stutter steps that occur and provide signals of strength. Like right here was a bit of a fake out, but what happened? We got a very strong higher low. So I really like trying to when price is struggling to break through or it's dancing around a boundary line, if your indicators are telling you to be bullish or you are looking for entries, then buying the pullbacks as price tries to break through boundaries is a very good way to do it. And I would consider this a pullback following a big breakthrough. So that's what I'm looking at. What do you have, Tyler?
Yeah, that's great. I love the way that you went from the daily. That doesn't look quite as good as the weekly when you look at that, but that's an important concept. When you think you've got a breakaway gap and it goes back and fills it, particularly on a shorter time frame like a daily, that's what you want to see. A continuation gap is even more powerful, but a breakaway gap, if you don't go down and fill that right away, which we did on that daily today, if you don't do that, then for the next 2, 3, 4, 5, 6, 10 days, you keep wondering, when are we going to go back and fill that? On a continuation gap, in other words, you're not breaking out of a big pattern, but you've been going up for a while, then all of a sudden you explode up with a gap. You can go for years without filling that gap, but not on a breakaway gap. So I was glad to see on the daily that that's what we did. On the weekly, very important what Socrates just showed you, that even though you get these one-day scares, particularly before and after holidays, that's when you want to go up to the bigger time frames and see, was there any damage done at all? And clearly on this weekly chart, this is a great looking weekly candle. Could you just throw the sequential on top of that for a second?
Oh, that is not the sequential. Here you go.
There you go. You got a 4. We had a green candle yesterday. We now have a 4 above a 3. Off to the races. It looks really good. I agree with Socrates. Good day for the stock market, even though it was a little bit scary around 11 o'clock or 12 o'clock this morning. But it was news driven, and that doesn't last very long. And so I think things are great there. So we are fully invested, other than 10% that we've got in the gold market. I'm more concerned about the gold market because of what we just talked about, not long-term or intermediate term, but just short-term. But short, intermediate, and long-term on the stock market looks great. That's where you want most of your money. You can have a little bit playing around in Bitcoin until it really tells us what we're going to do. There's the 3-day is an 8. We've got a 9 coming up. Someone mentioned that on Bitcoin also. And so why don't we take a look at Bitcoin now?
All right, let's do it. Okay. So You had mentioned that didn't seem like a whole lot had been happening on Bitcoin over the last little bit, and that is pretty clearly the case. Just been kind of dragging along sideways. But some very, very important action has been happening that I am watching like a hawk and looking at taking some signals and seeing some setups that are providing some entries that are maybe a little bit too favorable to pass up on based on risk reward. So been waiting for that last candle to close, and now I'll be waiting for the current candle to close, and the viewers with a close eye can start to see why. We have started to fall below this 50 EMA, and the 9 EMA is postured for a bearish crossover. And that is a potential sell signal that I might be taking. So in the last episode, I did talk about not liking to short Bitcoin in bull markets because I do like money, but I will short Bitcoin in bull markets a very, very small percentage of the time. About 5 to 10% of my trades can be shorts if the risk reward is very well defined and it is a situation that I'm not overdoing it, essentially. So that is what I was looking at. I was selling this bounce. I got filled in here. And then I was kind of watching very closely, really expecting a reversal from right in here. Instead, we got a little bit of a continuation. I believe that right in here is when I was out camping and without any service. So I was very happy to see that it created a lower high below this run up, below this high that occurred back on the 28th and 29th. So that is absolutely crucial to me. Keeps me in my short positions. I was basically shorting this action here and looking at using this as a stop loss. I decided to use local highs as a better stop loss, thinking that if the bounce off this 200 EMA is going to lead to higher highs, then it would have to pass this area first at 12,250 to 12,400. And if it couldn't do that, then that would be a very, very significant signal of strength. And now I am very pleased with what I've been seeing here. I was selling spot all back in here. Decided to sell more right here, decided to go short here, and now I'm thinking about adding to my shorts because of what we've seen here. I'm really pleased with that as it relates to my position. So what we've got right now is a very different picture than we had back in here. Back in here, I was buying the 200 EMA retest and then looking to add once we broke through this range and potentially when we identified the Wyckoff in here. So why am I thinking it's so much different here? We tested the 200 and we got a very nice rally, even a signal of strength breaking above the 50 EMA. That didn't happen here, but did happen here. So why am I thinking that this is such a different situation? And it's the lower lows and lower highs, which is what is so important to me. And it's also following this parabolic blow off top sort of move, which when I see something like that, it tells me to watch out for a long-term correction. So we didn't, even though we did kind of take off in a parabola before this action that I bought here, we didn't really get the same blow off top. We kept finding support. So this is a much different picture, and the main reason being is back in here we had horizontal support and a bullish pattern of Wyckoff accumulation. And here we have basically established a lower high, and that is following a lower low. So this is potentially a new bearish channel that is developing. We didn't see anything like that back in here. We had solid horizontal support, consolidation, and then signal of strength. Here we have, instead of kind of creating a new local high, we create a lower high, and are now, and that is following this lower low. So what I am looking at as a potential new trend developing, that would be a short-term counter trend move that could take us back down to, I think, about 62 is probably going to be my target, depending on how price gets there and how it develops. So even potentially extending a line up here to give us the full scope of a channel with a moving average there, maybe in the middle. So that is a potential new bear channel that is developing, that I'm very intrigued with, and I am very interested in adding to my short. The average cost basis, it's a future which had a premium, so it's really a different price than we would see on the chart, but it was right about in these areas. So now that initial position is in profit, and I'm getting further action develop how I want to see it, I'm very interested in adding in here as price appears to be falling back below the 50, getting a bearish cross with the 9, and then going to go ahead and show the resistance from the TDST setup trend line. Notice how close we got to testing that, and we reversed right before. So that it was a very interesting sign, and also just pay attention to how important these levels have been over the past couple weeks or so on the 4-hour chart. Back here it acted as support, providing a nice bounce, and then once that broke down, it went back and retested this one and not quite got to that price, and appears to be resisting now. We're getting a sell signal from the TD, red 2 below a red 1, and a potential sell signal from Consensio if this crosses here, and the close below the 50 here. So I love seeing the TD sequential entry line up with Consensio. And one other thing that I wanted to cover is that we have recently, we recently looked at these Henkin Ashi candles on the monthly chart, specifically as they relate to Bitcoin, and noticed how much more accurate it has been using the Henkin Ashi candles. So the question kind of is now, would these candles be more accurate on every time frame? If they're more accurate on the monthly, then why wouldn't they be more accurate on other time frames, is essentially the question that I am starting to wonder, and wanting to start to do a little bit of back testing and start to really understand what's going on with these candles and why might they be providing better signals. So just have been starting to kind of keep an eye on that over the last week. And so far, so good. We got this 9, it's a perfected 9 at the TDST level. That occurred right at the top of this bounce here on July 4th. It occurred when the price got to 12,061. We got that perfect green 9. Now let's take a look at normal candles, and we see that we did not get to a 9. It is loading the count right now. Still loading the count. Sometimes this thing gets a little stuck. Let's go ahead and throw it on here. So right here at the top at 12,061, we get the 9. If we go back to regular candles, the TD might just not want to be working for me right now. Sometimes it has trouble. So if you want to check yourself, this was not a 9 on the normal candles, and it is on the Henkin Ashi candles. And for whatever reason, the TI is bogged down, and I'm not really feeling like rebooting it. You'll just have to take my word for it that this candle right here on July 3rd that got up here, these did not get to a 9 count. If it did, then it would be showing I have the hide 1 to 8 on. So if there was a 9 there, it would be showing. So that is something that I found very interesting. Not only does it appear to be working better on a consistent basis on the monthly chart, but perhaps even on smaller time frames, the TD could be working better. And if you can just make some small little tweaks to systems that work very well, that give you an edge, give you different, slightly different buy and sell signals, that can pay dividends tremendously in the long run. So that's everything that I wanted to cover. Do you have a chart for us, Tyler?
Well, I'd like it if you could pull up, which is the time frame you were using with the Heikin Ashi that said that we were above the cloud, and if we pull back into it, that could be a sign of trouble. What level would it take to do that?
That is a great question. I'm very glad you asked. That's something that I have forgotten about, and that is actually with traditional candles that I use the Ichimoku cloud with on a weekly time frame. And this cloud is very powerful, so I'm glad that you brought it up. And notice how this last pullback almost perfectly found support at the cloud. That will happen time and time and time again. So that is very, very interesting, seeing breakout, continuation. Now we're getting a correction that is supporting above the cloud. And look at this thing. It's just so amazing how it works and how it's calculated, in the sense that last week, if we pulled back below 10,000, it would have invalidated this buy signal. Last week, we could have fallen back into the cloud just by closing below 10,000. Now this week, to fall back into the cloud, we have to close below 9,700, and that keeps pulling back. So we can, according to the cloud, come all the way back down to 58.68 in the first couple weeks of November, and this thing will stay bullish. So that's just amazing to me how it totally lines up with what I'm seeing, in the sense that originally I really needed support to hold right here for it to maintain this buy signal, whereas now it's postured for a prolonged pullback to the first next flat area is 7,400, and the next one after that is 65. So these would be very good areas of support to watch out for, and watch as the price will refuse to close inside the cloud. It will really try everything it can do not to close back inside there, and the cloud is helping it out by showing that it's got more room to pull back as time goes on, and then it will start progressing back up as it has this bullish Kumo twist. So this weekly cloud is absolutely fascinating to me. This is why I use it to determine long-term trend. It can tell you that the trend just turned long-term bullish, and then it can also tell you that an enormous pullback could happen and the long-term trend would stay bullish. So this is a very interesting setup right here that we're seeing, and something to pay very close attention to. And I'm very glad that you brought that up, Tyler.
Great, good. Yeah, I was wondering about that because I was fascinated the other day when you were showing that. Um, I uh, I think two things. Number one, we made some news here today because Socrates is turning bearish. He has been still bullish, but taking profits over a long period of time now, days at various levels. And, but now he's actually thinking we could get a pretty significant drop from here. I'm still in a little bit different camp, but I love all the analysis we just heard. I'm still long for some clients, about 10% of X, after being 20% of X, selling half of it. A couple of clients with special situations, we did sell up around the $10,000 to $11,000 range. And I've been talking about where would I buy it back, and my answer has been I've got people that I want to buy the first 10% back between 8,500 and 7,500. And looking at this chart, that looks very reasonable to me. But Socrates has come fairly close to convincing me that this could turn into something a little bit bigger on the downside, not on a long-term basis, but on another intermediate-term basis. I'm still not convinced that long-term we are looking at a long-term trend in Bitcoin. I still believe it's an intermediate term, but intermediate terms can have significant pullbacks, particularly ones that have run from 3,000 to 14,000. We haven't had a pullback yet. So a pullback to the 7,500 to 8,500 level feels about right to me, but that's just touchy-feely stuff. There's no way to particularly say that other than looking at this chart. You see 4 weeks in a row of support somewhere in that zone. And that's what I like to do, is I like to look at zones and fields of support and resistance. But very interesting on this shorter and intermediate term stuff today. In a sense, what I'm debating is, will 75 to 8,500 be hit? Because if not, I don't want to be left behind if this turns into a real bull market. But on the other side, if it is hit, I could easily see it go back to the low sixes. And what we just saw shows about the same thing using that cloud analysis. And so rather than get ahead of myself and ahead of decision making, we take it a day at a time. We know what the risks are to the downside. We know what the rewards are to the upside on all time frames. We just take it a step at a time. Don't get ahead of ourselves. But very interesting action this week, as Socrates just laid out. So thank you very much for all that. Wow, right on the button, 5 o'clock. Also, I wanted Socrates to just go into the SAR story a little bit. The stop and reverse points is really generated a lot of interest with a lot of smart people that have sent us a lot of really cool stuff, including some of Wilder's original work and original calculations, which I know I've got somewhere, but somebody jumped the gun and sent it to us. And I just wanted Socrates to take a second, and if he is still here. Are you there, Socrates?
Yep, sure enough. And
maybe talk about that a little bit. Unfortunately, we're not ready to draw any conclusions yet, but we're getting really close. And I'll let Socrates explain. And then we will let you all go for the vacation.
All right. And just to clarify, it might have been a little bit confusing because how everything can change so quickly. And we're always talking about short, medium, and long-term trends. And it's very counterintuitive for most when I say that I just recently turned long-term bullish right here on the week of June 17th, 2019. But now today I am turning short and medium-term bearish. So that is something that is actually very common for me, but maybe very counterintuitive to others. So let's just kind of think about that very quickly, in the sense that to turn a long-term bear trend into a long-term bull trend, you need a big move. And we talked about how we'll often miss out on this big move because we're waiting for the long-term trend to turn. And when you do finally get that, well, that could suggest that it's time to cool off on a short and medium term basis. And that's exactly how I view it, and kind of what I expect is that after turning long-term bullish, I need to watch out for a big counter trend correction that shakes a lot of people out before we get a continuation move. So I am short and medium term bearish, but I am long-term bullish. So the long-term bullishness is what's most important by far. That means I'm going to be buying this dip. And it means I'm also going to be extremely cautious with shorting. I do not like to trade against the long-term trend. However, I am a swing trader, and I do like month-long moves. And basically, I am okay with shorting here because it's trading with the short and the medium term trend for as far as I'm concerned. If I was not medium term bearish, then I would not even be considering a short little scalp. But since I'm medium term bearish, I'm thinking a month or even 2 or 3 that we could correct down into here, and that would maintain a long-term bullish trend, but would also provide some tremendous opportunity to the downside while that is developing. So hopefully that makes some sense, that I have recently turned long-term bullish, but I am short and medium-term bearish. So moving on, we are very excited about the response that we got from our last video looking at the parabolic SAR. As Tyler said, a bunch of really smart people have chimed in, and it's been an absolute pleasure to get access to some of these documents and get some input from other people. So I just want to give some shout outs real quick. The first document that came in, which I'm kind of a little bit tickled pink about, is this original Wells Wilder document that is new concepts in technical trading systems. It looks like it's scanned in from a law library somewhere in North Carolina. And this, to me, is just absolute gold. This is getting it from the horse's mouth. This was from back in 1978. This is exactly how he was teaching his different systems.
Go back up just a few pages. I get a chuckle out of this. First of all, 1978, that's when I learned a lot of my stuff from him. And I've got this book. It's in storage. So that's number one. Number two, now go down a little bit. He starts talking about how he does his calculations. I love it. With what kind of computers? There we go. The programmable calculator, blah, blah, blah. And then he even mentions a couple of them, Sharp 365P and the Texas Instrument TI-59. That's the way us old timers did it back then. And that's about the only tools we could use to get these algorithms to be able to turn stuff out for us. So just a couple of interesting things there. Go ahead. Sorry.
No, absolutely. And I really appreciate you chiming in there, because that is absolutely fascinating that He's talking about the low cost of programmable calculators, making his methods more accessible to the crowd. So that's
Right.
absolutely fascinating. So just scrolling through this, that it goes through the RSI and the parabolic system. So I am absolutely very excited to read through this and really uncover exactly what is going on with not only the parabolic SAR, but maybe some of these other systems. So big thanks to user Darth Norm, who posted that in the YouTube chat. Big thanks to Paul Jones for not letting it slip through the cracks. He caught that and posted it in our Telegram group, which is why I saw it. So I am very appreciative to both of you. And if anybody else out there has some stuff like this, I would absolutely cherish it. Would absolutely love to build some sort of library of these classical technical books, because some of these documents are so hard to find now. Imagine how hard they will be to find in 15 years or whatever. So then we also had some other great input and feedback. A lot of people writing in saying that it looks like there is a problem with TradingView's calculation that causes the SAR to be within a penny so frequently. Many others, or some others, have checked on other charting systems such as Bitcoin Wisdom and noticed that that the Bitcoin Wisdom looked to be calculating it how we are. We don't know that for sure. It is calculated above the current price, showing that it did get violated, which is what we do expect. So had a number of comments there. We are wanting to verify some of that, but we do appreciate everybody sharing those ideas. I wanted to say thank you to Casey Bowman. He, I think, has put together a script for the parabolic SAR on TradingView based on the calculations that we went through, such that if we were calculating it correct, Casey has put together a Pine script and made it open to the public, so that potentially we can start using that. We'll need to go through this to make sure that we are understanding it correctly. So still hang tight and wait for us to get back to you. And then I did just see Zach Sweeney said that he sent me a long explanation on Twitter. So I'll be checking into that, and I wanted to thank you all who have chimed in, and we'll definitely be coming back with some more definitive answers in the near future, and it'll most likely be in big thanks to this document right here, which will give us some confidence as to the way that we are looking at it. So just wrapping up the day, and wanting to remind everyone of our upcoming webinars. You can find these on lucidinvestmentstrategies.com. If you go there, hover over the products and click on webinars, and that will bring you to this page here. And you see that on July 12th, this is our upcoming webinar, will be about retirement accounts. And that is for 0.01 BTC or 150 USD. And after that will be July 26th, 2019. We will be holding a webinar for intermediate and advanced Consensio. This is the main system that both Tyler and I use to identify entries, to manage risk, and to identify trend. And we will be sharing our more details about how we like to trade those. For anybody that is interested in joining but hasn't gotten quite up to speed on Consensio, go to YouTube and search for Deep Dive into Consensio. That is a free YouTube video that will go over the subconditions of the entries and exits, as well as how trends and reversals are determined. That video by itself should get you up to speed for this intermediate and advanced Consensio webinar. If it doesn't, you will get a video of this such that you will be able to refer back later on. And there also is a original Consensio webinar that was done a while back, but is still available. If you really want to make sure that you are prepared, I would strongly recommend joining and attending this along with watching the deep dive into Consensio on YouTube, and then you absolutely will be fully ready for this intermediate and advanced Consensio webinar. So that is the shill that I wanted to share with everyone. And anything for you to add, Tyler?
No, that was perfect. Thank you very much for all that, and thank all of you who are so active, not only on our Telegram, but listening to the vlogs and then helping us work through some of these technical issues about these trading systems. We take a lot of them for granted simply because you get onto something like TradingView or Stock Charts or Ninja Trading or something, and you press a button and you think you're looking at reality, and most of the time you are, but it's so much better to really understand how all these calculations work, so you can do it yourself and understand what it is telling you. And that's, you know, that's why getting in depth into things like Hyperwave and Consensio and Selgin and the sequential system, even though it means paying up a little bit, believe me, it's worth the money. I paid Wells Wilder Jr. back in the 70s to learn all of those systems at different time, and I paid Larry Williams more money than we're charging today for this kind of in-depth analysis. But I've used it now for my entire career, 40 years. I've used these. These are assets that I have that unless you attended those webinars back then, you don't have access to it. And then sometimes when you get access to it, like on TradingView, because it's become such a standard thing, you assume that by pressing a button you understand what's going on, and you don't. There's all kinds of implications around all these technical things. So anyway, thank you, Socrates, for all of that. We ran over, but not bad at all. And great analysis today. A lot going on in the marketplaces. I hope we clarified some of our feelings and analysis about what's going on. And with that, have a great weekend, everybody. Socrates, have a great weekend.
I appreciate it. And there was a quick question that I wanted to answer from Bulbia in the chat. He asked, if I take part in your webinar, then will I be in your Telegram group automatically, or your Telegram group cost extra? And everybody that does attend the webinar will get added to a private Telegram group that Tyler and I will participate in. It won't be the main one that you hear us talking about, the Hyperwave Telegram group. It would be a separate one that is specifically about Consensio. And for those that are interested in there's a couple Hyperwave Telegram chat groups that anybody who attends the Trading Hyperwaves webinar or the Hyperwave webinar gets added to that Telegram group, and that is at no additional charge. So that was a good question that I wanted to answer. And as we almost finished on time, we go a little bit over, and I appreciate you having me on. I hope everybody has a great weekend and enjoy your time with your family. And we will be taking tomorrow off, but we'll be back on Sunday to take a look at the weekly close. So everybody have a good one.
Great.